All right, good afternoon, everyone. This is Rose with Brooks Price Action Team. I'm going to do Monday, October 14th, end of day review, real quick, and we'll go from there. So yesterday, which is Friday, is market has been up and closed pretty high, and it was up and sideways and went up and made a new high, then came back and closed below. But it opened here, so it closed here. So that's pretty high. That's because if you look at the weekly bar on the left hand side, this is the 10-11, the week of 10-11, and a market closed a really strong outside up bar. That's a buy signal bar for today and for this week. So even though Fridays had an upper wick due to the sideways and a close below the moving average, it's a sizable upper wick, but we gapped up at the open. That's a significant gap up. So I'm thinking with the bar 1, such a strong bar closing on its side, follow through, open and close above the close of bar 1, and close of bar 2 is above the high of bar 1. So that's continuation for bulls. So they might be seeing something there, and that something is this trading range is breakout. They're looking for a 1-hour target, which we reached with bar 4. You can also measure is breakout target right there. Here we go. So that was your 1-hour, either that one or that one. But really, market goes sideways, and we have made up, down, is up again. Now we have a double bottom at the moving average, is a first entry long, but you're buying against bar 7 and 8 strong. Close bar 7 is bad follow through 8. So here's the first buy. Probably no one's going to buy above that bar. We need a second entry long, and that is your bar 11. Bar 11 is your second entry. You can buy above it, but there's not much of a room to upside either way. You can also say, what if I buy here? Would that be my 2R? Yes, that would be in fact your 2R, and the market actually goes up, comes back down. You have a expanding triangle. What I want to show you that we actually reached that 2R if you measure from here. My entire measurement was from here. That was 1R, and we had almost 1.5. But really, you should be measuring from here, the breakout point, and then you would get to the 2R at the end of the day. So 3 bull bars, strong breakout, sideways and up. We make a new up, right? And market is thinking, hey, this is up, this is down. This is up again, down, up. Nope, there's no third leg there. So market will probably going to give you a third leg. But regardless, okay, either you're taking the trading range breakout 2R from here, or today's price action breakout bar 4, you have higher prices. Now bears try to sell. You do have here a reversal. I did actually sell below bar 15 and made money with second leg down. But the third leg bears got trapped at the moving average. First sell and second sell failed, and now market is trying to trap the bears. So bears are trapped from underneath bar 24, and many bulls is probably trapped up here. They're looking to buy. So they've already bought at the moving average and got a break even right here. So the second leg comes down, or you can say this is first leg, this is second leg, pull back, this is the third leg. That's how I count it. And bears are trapped, so 2 bear bars, probably sellers here. They're gonna try to sell and try to break even. Bar 27, possible average break even, but not actual break even. But they got close as much as possible to these bar 24 close, and we couldn't test the 24 close. We were actually one tick. There was a 1 tick failure. So 27, probably buyers there. This is first entry long and a second entry long, and we're in a swing. You get a double bottom, higher low, or 1, 2, 3 is, I would say this is probably a failed head and shoulders, left shoulder, right shoulder. It failed at the moving average with the second leg or third leg, however you count it. Bulls are coming in. So I'm looking for good signals. Bar 25 is not a good signal. Bears probably looking to sell again. They tried, failed, but now I have a better buy signal. I will buy the 28. I added more with 29. I added more with 30. I'm targeting the prior highs. We go up to the prior highs we tested. We now are making new highs. You do have a spike here, pull back here, and a channel with 3 pushes up. 1, 2, and 3. So this is the low of your channel, or the starting point is when we get a signal bar, bear signal bar. We're going to test, come down with several legs and test the bar 34 lows. Whether we're going to test the high, we're going to test the low, which we did. And the market actually tested is right there. So I was selling, but I kept telling people that this may not continue to come down. If you are selling this, you should be selling from here with the stop right there. That's your 1 hour. You can put the stop a little bit higher, just a little bit higher, but that will give you a 1 hour target. Either or is bears trying to sell, but I told everyone there is a gap here. Market is forming gaps, huge gap right there after the open. Another gap right here. Bulls are keeping in control of the market. And is leg 1, leg 2, leg 3. There's a wedge bottom 45, 49, and 55. So that must be a bull flag. So since we made a new high here, anyone who is buying, looking for higher prices, they're going to move their stop underneath 55 if they're still swing trading. So we got a trap right here with 55, good signal bar, although is only a 1 or 2% of its body is closing above the moving average. It is a reversal bar. Bulls will start to buy one tick above or the close of that bar. So if you are buying that bar, and then you're looking for a 1 hour target and then prior highs and a 2 hour targets. If you put your stop a little bit lower, okay, maybe, I don't know, let's see, maybe the 29. We didn't really get to 2 hour, but at this point, since we take out these highs, you don't need to do that. You don't need a wide stop. You can simply put it underneath 55, then that would be your 2 hour. We reached 4 hour and possibly 3 hour and 4 hour. So 1, 2, 3, 4. So market is keep buying and buying. We have 3 bars. I told everybody, if you are taking profit here, that's because you see 3 bear bars, possibly sideways and down price action. That was down. That was the second leg pullback, and second leg is closed on its high 67. More bulls are coming in, but I'm counting now 1, 2, 3 wedge top. Now everybody thought that this was the wedge top, but that is not the wedge top. Some computers will see that as a wedge top, but the distance is this void right here. The distance and this gap right here is not proportionate, so we need another high that is proportionate with this. So I'm thinking I would count from here. That's first top, second top, and here is my third top. And I did sell this and took profit at the moving average, but then the bulls showed up. So I'm looking for another high, possibly an overshoot of the trend line. Here we go. You can also measure from here. That would be your trend line. And that's the overshoot of the trend line. We're going to trap the bulls, and at the end of the day, we will come back down. So that'll be my trend reversal. So I did sell this. I exited out of my long because we reached a 2 hour target and then overshot it a little bit. And then I had micro targets that I calculated, which I'm not going to do that in here in detail. That's within the recordings of the trade file. But here I sold the close of 77, even though there's not much of a space to the moving average, but I sold it. It's a surprisingly big bear bar. Probably wants to get a leg or 2 down. I was targeting bar 60's close. We didn't quite get there, but I said look at the bar 44. We're probably going to overlap. So there's a little bit of gap here. There's a breakout test here. We've tested, but that's about it. And I told everybody to take profit. But really, this is what I was seeing. First, after a huge move up, bullish, first pullback, second pullback. So is from the first pullback high to the second pullback high extended, and then from here to here extended. So you can either take that was a break, is retest, or you could say, no, I'm just going to take the entire is low. I'm going to connect with the 55. Then we haven't really broken. If tomorrow is we end up actually breaking this trend line, market is going to sell into is this target right here. So we're going to come down and test that target. But that's not only it. Yeah, we would test that 55 low. We would test right here. So if we do come down and test, and then we would bounce again. But if we do break this, then we're going to test the bar 19 lows from today. Okay, so right now is market is going back and wanting to retest. So I told everybody it's time to exit out. Is we measured it like this. I pretty much excluded that wick. So break of it, I had a target, and the target line was pretty much this high. And I said 0725, I'm going to take profits. We did break below it, so we could actually come down more, but we are at the end of the day, there's no time left. So all in all, overall gap up and bullish is climactic is move up, bull trend is, and then we have a double bottom with 5 and bar 10. I'm targeting the highs. We keep pushing 1, 2, and 3. And then a couple of legs down, but it formed a double bottom bull flag. So I'm looking for double bottom neckline. I'm looking for this neckline 23 to be tested and broken with bull bars. And I want to see the prior highs to be tested and market to make a new high. When market makes a new high, I expect a couple of legs down to the moving average, but I'm looking to buy around the moving average, and I'm looking for is furthermore is new highs and new targets. I do have is good 2-bar reversal, so we should get a second entry short, and we should get a couple of legs down, but the legs are trapping the bears, so there's no point selling. Is if you're still selling, you have to exit above bar 55. You buy and you're looking for strong bull closes. Well, this is up to debate. There are not many strong bull closes. But okay, bar 61, I guess I could buy. The best bar was, I think, the bar 58. So I did buy that, and I actually bought above 55. I bought again. I'm targeting the prior high. We made a new high, not a good signal, bar 63. So market is looking to probably come down. Not a good sell signal, bar 64, but it sure is 2 dojis at the highs. Is you got 1, 2, 3 wedged up. So I'm thinking we're going to come down and test these highs. At least we're going to test the bar 60 close, which we did that with 67. I've taken profit there. It was a quick scalp. But then I said this is going to bring more bulls. It brings more bulls. We make a new high, but we have now trapped the bulls at the end of the day. Expect a couple of legs down to the moving average, possibly closing at or under the moving average. Now, here's the thing. If bar 77 wasn't that big, and it was a bear bar, followed by another bear bar, followed by another bear bar, okay, pullback, came down with second leg, we would have another breakout and probably close above the moving average. Because 77 was very surprisingly big, so it's going to expect a couple of legs more down. Most possibly it's going to close below the moving average. Tomorrow is we could test these highs, but market would give us a double top neckline and then it would give us a swing down, and that swing down could come down and test these lows. The projected targets is we would probably come down here. If we break this, definitely I'm looking at is bar 19 low test. So tomorrow it's going to be very interesting, is because it's a strong bull bar. We're probably gonna want to test its high, but if we trap the bulls for the second time, we could come back and test the neckline 79 or 80, and then if we can trap those bulls, we can then come down and probably target this gap area, which is this area. And we'll see how that goes. Anyway, I'll see you guys tomorrow on Discord. I'm not streaming, but I'm back streaming on Wednesday. Bye, everyone.